I started dollar cost averaging Bitcoin 3 years ago to see how it would compare to my traditional dollar cost averaging of index funds in my 401k and my Roth IRA. And so every year that I've been here on YouTube, I've been making a video that shows you how much you would have made if you had done the same thing that I did and dollar cost averaged just a little bit of Bitcoin every single day. If you guys are just here for the results, if you had bought just $1 a day of Bitcoin over the last 3 years, you would have spent $1,096. And as of today, the beginning of August of 2022, you'd have a little more than $1,600, down from the all-time high of $4,100 back in November of 2021. If you guys were just here for the numbers, please go down below and like the video before you leave and share this video with anyone who you might think would find this kind of content interesting. But for everyone else, if you guys watched to the end of the video, I'll be diving into those numbers with a lot more detail. I'll be comparing those Bitcoin results to other large asset classes like the S&P 500 and the NASDAQ and gold. And then finally, I'll be sharing with you guys why I'm considering quitting Bitcoin dollar cost averaging, and I'll share with you guys an indicator that has predicted all of the major bottoms throughout Bitcoin's trading history. So go down below and smash the like button for Bitcoin dollar cost averaging, and let's level up your brains. All right, guys, so the link to the spreadsheet is going to be down in the description if you want to copy this spreadsheet and mess around with the numbers for yourself and change some of the assumptions. Basically, we have data on different assets down here at the bottom in these different tabs. So Bitcoin, S&P 500, QQQ, gold, etc. I'm using an assumption here of $1 per day, just because this is a small amount of money that I think is reasonable for anyone to have dollar cost averaged over this last 3-year period. So let's just go ahead and dive into some of these Bitcoin charts first and see sort of what this ride has looked like over the last 3 years. You'll see here the strategy has been in profit almost the entire time, except for this March of 2020 period where the COVID crash happened. And you'll see that the ROI at that point fell down as far as negative 45%, which is a really big swing in the negative. You'll see that since the very bottom of negative 45% ROI in March of 2020, we climbed up, and by about May of 2020, we sort of escaped the negative, and we haven't been negative since then on dollar cost averaging Bitcoin over these last 3 years. You'll see the ROI peaks in April of 2021, and then the US dollar value of the portfolio and the profits peak in November of 2021. And then obviously since November of 2021, the entire global economic system, but specifically Bitcoin, has crashed, quite a bit from those all-time highs. So at the peak, we were at almost 500% ROI and a little bit more than $3,300 of profit. But since then, we've fallen down and ended this 3-year period with about 50% more money than we put in. So the return on our invested capital was 50%. And then obviously if you had dollar cost averaged any more, this profit number would change, but again, your ROI would not change. You would have still ROI'd about 50% over these 3 years. And this is obviously a far cry from the almost 200% that we were at when we were dollar cost averaging with this strategy about a year ago. But as we'll see later on in this video, 50% is definitely nothing to sneeze at. So these numbers by themselves are pretty cool, but whenever you present numbers, if you don't show the context of how something compared to something else, the numbers don't really mean anything. And so next, let's go through these exact same numbers for what if you had bought a single dollar of the S&P 500 or the NASDAQ or gold over this last 3-year period. The first thing that should pop out to you about these charts is that over the course of 2021 and early 2022, Bitcoin dollar cost averaging was absolutely dominating dollar cost averaging the S&P 500, the NASDAQ, or gold. You can sort of see that gold in yellow here, NASDAQ in red, and then S&P 500 in blue. They're all very tightly coupled because of how much Bitcoin, outperformed everything over the course of 2021 and early 2022. But if you drew a straight line from sort of like the end of 2020 to now in 2022, and you cut off this entire head and shoulders pattern from Bitcoin, things might look a lot closer. And it can be sort of hard to read some of these graphs because of how much Bitcoin has blown out the y-axis compared to the NASDAQ, the S&P 500, and gold. So now that we've changed to a log scale, we can sort of see the differences between gold and the S&P 500 and QQQ a little bit better here. But you can see that Bitcoin is comfortably at like a $1,500 profit, while QQQ and SPY and gold are in double digits and triple digits of profit. Bitcoin is sort of like an order of magnitude higher than both of those and 2 orders of magnitude higher than gold from a profit and value perspective. And then when you check out the ROIs, gold has really been underperforming everything from the beginning of 2021, and Bitcoin has been massively outperforming everything since the beginning of 2021, and here even ending a bit higher than anything else has ever been, right? So like at the very top of QQQ's performance, performance, it hit about 50%. And now at the, relative bottom of Bitcoin's performance, we're hitting, 50% over this 3-year period. So now that we've seen how dominant Bitcoin dollar cost averaging has been versus just normal dollar cost averaging of an S&P 500 style index fund or of something that's been a time-tested store of value like gold, next I'm going to go through why I'm considering stopping my Bitcoin dollar cost averaging strategy. So my thoughts around this topic have been informed by studying a particular indicator that we'll go over here in a minute over on Glassnode. But first, let's talk about Bitcoin dollar cost averaging sort of on a year-by-year basis. My personal dollar cost averaging from 2019 and 2020 are up about 50 and 77% respectively for each of those years. But my 2021 and my 2022 Bitcoin dollar cost averaging, those are both down by 28 and 37% respectively. With some of the best months here being March of 2020, that's up over 300%. But then as we scroll down, some of the worst months here, like December of 2021, are down nearly 60%. And it would have been great if I could have just, instead of buying Bitcoin up this entire time through this head and shoulders pattern, if I could have accumulated a lot of Bitcoin when it crashed from 7,000 or 8,000 down to 5,000 back in March of 2020, and then again maybe dollar cost average through the end of 2020, but not bought again until this recent crash back in June of 2022 when it crashed all the way down to 19,000. Completely avoiding all of this crazy chaos that happened in 2021, which of course would have been a very emotionally difficult thing to avoid. But I think from just a stoic, like I want to accumulate as much Bitcoin as possible at the lowest price possible perspective, it would have been great to only have bought when these giant crashes happened. And, in hindsight, this crash down to 30,000 here in the middle of 2021, it wasn't as good of a buying opportunity, obviously, as it was down here at 19,000 recently here in July and June of 2022. Luckily, there is an indicator that shows us just those two periods of time. It shows us March of 2020, and it shows us these last few weeks here between June and July of 2022. And that indicator is called the MVRV ratio. MVRV stands for market value, realized value, and it's basically a ratio between the market cap of Bitcoin and the quote realized value of Bitcoin. So the market cap, obviously the value of all the outstanding Bitcoin in the marketplace times the current price of Bitcoin. And then the realized value on the bottom of this ratio here is going to be all of the different Bitcoin in the market times the price at which they last moved hands. So if I bought a Bitcoin at $5,000 and I held it all the way to today, the market cap value of that Bitcoin is going to be 22,000, whatever the current price of Bitcoin is. But the realized price of that Bitcoin will still be $5,000 because it hasn't changed hands since it was purchased at $5,000. However, if I bought a Bitcoin back at $5,000 and then I sold it at $50,000, that same MVRV calculation is going to be $22,000 for that one Bitcoin in the top half of the fraction because that's what the current price of it is. And then let's say it hasn't changed hands since I sold it to someone else at $50,000. The current realized price of that Bitcoin would be $50,000. So in the first case, the $5,000 Bitcoin, I have a massive capital gain on that Bitcoin and the fraction is above 1. And then in the second case, whoever had that $50,000 Bitcoin has a massive capital loss on that $50,000 Bitcoin because the price is nearly half of what it was when it last traded hands. And so the MVRV is going to be less than 1. But the MVRV doesn't just track a single Bitcoin, it tracks every Bitcoin that's currently trading on chain. And so when the MVRV ratio falls below 1, it means that the average Bitcoin holder is underwater or they have an unrealized capital loss on their Bitcoin. And so here what we're looking at is a chart that is tracking the price of Bitcoin here in black and then the MVRV ratio of Bitcoin here in blue. I've been in the space since about 2017, and so you can see here that throughout all of 2017, the MVRV was about 2 in January, it fell to about 2 again in July, and then it peaked at about 4. So that means that the average Bitcoin holder was up like 400% on their Bitcoin. And then obviously in the bear market of 2018, it finally fell down below 1 in about November of 2018. And so when it falls below 1, it means that the average coin that's being held is at a capital loss. And you can see that when the MVRV falls below 1, it has historically tracked with price falling into a range that would be very attractive to buy at, right? We can see here in 2018, it fell from $6,000 down to about $3,000, and then it never hit $3,000 ever again. And the next highest low was in March of 2020. And if we scroll down here, we can see that MVRV was again below 1 at 0.9. And then between 2020 all the way through 2021, MVRV was massive, right? It peaked at about 4 1.4 here in February. It fell down to about 1.5 here in mid 2021. So that was when the price was at about 30,000, and it was saying still don't make a purchase here yet because we're still not under 1 on MVRV. And then finally it fell to below 1 on June 15th here of 2022, and it's been below 1 for quite a while here, and it's just starting to peak above 1 now in late July. And in hindsight, it would have been really great to buy some Bitcoin at $19,000 on June 18th of 2022 because you'd now be up, right? We're back to like 24,000. You would have made a quick little profit there just making that trade. And so during these last 3 years, the only times that you would have bought if you were taking advantage of buys only when the MVRV was less than 1 were the COVID crash when Bitcoin was around $5,000. And then again in this July crash here when Bitcoin was about $19,000. And so if we come back to our charts here and we factor in what would have happened if we had just dollar cost averaged the exact same amount of money, but we had only dollar cost averaged into Bitcoin when the MVRV was below 1, here's what we would have ended up with. So the first thing you can see here is that the costs are exactly the same. We bought the same amount of Bitcoin in the MVRV case and in the dollar cost averaging case. But in the MVRV case, again, we only purchased when MVRV was less than 1. And so what we can see is that we didn't buy really anything until March of 2020. We ended up in profit here almost the entire time. I think there was a single day where we were negative during the COVID crash. It didn't exactly predict the bottom. But you can see here our ROI at the end of this entire period from dollar cost averaging on MVRV was about 75% versus the about 50% of the just dumb dollar cost averaging everyday Bitcoin. And we'll see that as price increases in the future, the MVRV case is going to have us with a much higher amount of Bitcoin total. So if you had dollar cost averaged $1 per day into Bitcoin for the last 3 years, you would have ended up with 0.069 Bitcoin. And if you had done the MVRV dollar cost averaging, you would have ended up with 0.08, which again, if you had done this with more amounts of money, the gap between your MVRV case and your dollar cost averaging case would just blow up, right? You'd end up with much more Bitcoin if you had done MVRV than if you had done the normal dollar cost averaging of Bitcoin. Sort of the downside here is that if the Bitcoin price had just run away and never come back down, MVRV would not have crashed to the point where you would have ever made a buy for quite a while. We went this entire time from March of 2020 until June of 2022, not making a single purchase of Bitcoin. But again, you can see you were massively in profit on the MVRV case just from making those single buys back in March of 2020. You got almost the entire benefit of holding Bitcoin throughout 2021 like you did in the dollar cost averaging case. You just don't fall as far when things go bad because you're accumulating exclusively at relatively low costs. You'll see we added MVRV in black here, and you'll see that the value of our MVRV case, it starts off very low because we aren't buying anything until March of 2020, but then we experience all of the gains of Bitcoin along the way. And so you're seeing it's slightly below the value of Bitcoin throughout all of 2021, but it's still much higher than the S&P 500 and gold and the NASDAQ. And then you'll see that as the Bitcoin price falls, MVRV becomes the worst strategy of all, but then you start to heavily accumulate, and as price starts to increase, you come out of this 3-year period with, first of all, the most Bitcoin, and then second of all, the most US dollars. And you can see here on the ROI chart, your ROI for the MVRV strategy is strictly higher than every other strategy from basically the inception of the strategy. As soon as Bitcoin starts to take off here, your ROI just never comes down to even the level of Bitcoin, let alone the level of the NASDAQ, the S&P 500, or of gold. I will continue to make these videos over the next, hopefully 7 years, and show you a 5-year time horizon, an 8-year time horizon, and a 10-year time horizon, and every year in between, so that we can make these same comparisons and truly see what the best asset to dollar cost average is, and to hopefully truly see what the best dollar cost averaging method for something like Bitcoin could be. Obviously, just like everything else on this channel, none of this is financial advice, and there is no guarantee that MVRV as an indicator continues to pick out bottoms in the Bitcoin price as it has done so far. Past performance is no guarantee of future success, but personally, I'm going to be moving some of my funds away from a dumb dollar cost averaging the same amount strategy every single day into a only dollar cost average when the MVRV is less than 1 strategy. However, I do need it to be automated because I don't think I could have gone this entire time throughout 2021 when all of this crazy emotion and FOMO was happening without buying a single Satoshi of Bitcoin. I think that would have been very difficult emotionally for me to do. And so I absolutely have to automate this strategy if I'm going to stick to it for the long run. Comment down below if you guys are interested in more Glassnode content and some of these more interesting indicators like MVRV. Unfortunately, Unfortunately, to implement an MVRV strategy using the Glassnode API, I will need to purchase a premium Glassnode subscription, which that fixed cost would theoretically eat into the profits of the MVRV strategy. But let me know if you guys would be interested in me building some sort of MVRV dollar cost averaging bot, and if you're interested in some of this more premium Glassnode content. And then to commemorate my second year here on YouTube, I'm starting a second channel where I'll be posting more reaction style content and more entertaining meme style content versus the educational content that will always live here on this channel. So if you are interested in getting even more content from me every week, definitely go check that channel out. It doesn't have any videos up right now, but in the next couple weeks, I'm gonna start spinning that up. So make sure you hit the notification bell to get notified when those videos do finally drop. And I'll leave the link down in the description to that and all the other resources that we talked about in this video if you do wanna learn more. Like this video and share it if you learned something, and subscribe for new content every Monday at 10 a.m. Eastern. I love you all. Goodbye.